Hi everyone, welcome to this playlist. In this playlist, we will be talking everything about arbitrage. The concept of arbitrage is very powerful in the world of financial markets. Have you ever wondered how some stock traders were able to make risk-free profits from financial markets? This is where the concept of arbitrage comes in. So this video explains you the concept of arbitrage, how it works, and what you need to capitalize them in real world. Remember, this is just an introductory video about the arbitrage, but going forward, we will add a subsequent videos in the playlist where we will be explaining a real life scenario, a tools what you need to capture them, and of course, we will explain different types of arbitrage in this particular playlist. Let's jump in to understand what is arbitrage. Let's understand the term arbitrage. The concept of arbitrage is very synonymous way of making risk-free profit. Let's say you find a product available in two different markets at two different prices, then there is an arbitrage opportunity exist by which you can make a risk-free profit. Let me tell you how. Let's say you see an apple as a product available in two different markets, and you end up seeing an apple available at the rate of 100 rupees in market A and 150 rupees in market B. As a trader, when you see such price discrepancies, what you're supposed to do is go to a market A and buy an apple at the rate of just 100 rupees, and you go to market B wherein you can sell the apple at the rate of 150 rupees. And if you do so simultaneously, you were able to lock in a profit of 50 rupees, which comes at risk free because there is no way you lose it. So it's a very smart way of capitalizing an opportunity where you see a price discrepancies between two different markets. This is what called as arbitrage. Remember, although the concept of arbitrage is very appealing from a theoretical perspective, they are very rare to find them in a real life. So let me first explain what are the challenges in capitalizing the arbitrage opportunity. Number one, even if you take an example of Apple, which is available in two different markets at two different prices, by any chance, if you see that the two different markets are available at two different geographical locations, then there is a concept of a transportation cost comes into the picture. There is a concept of transaction cost comes into the picture. There is a concept of taxation comes into the picture. So everything goes under the transaction cost. So if you see the variable cost which takes between moving the apple from one market to another market more than 50 rupees, although there is a price difference of 50 rupees, there is no way we can capitalize them. So that is a big difference between the concept of arbitrage in real life to a theoretical books. In a theoretical books, it is simply be assumed there is no transaction cost. On top of it, everything is being worked out. So it is practically difficult. But do remember, by any chance, if there is a transaction cost is lower than 50 rupees, there is a way of making profits. So that is what we need to understand. The transaction cost comes in a very different forms. As and when I explain things in detail, I will be highlighting it accordingly. That's one. Number two, by any chance, if you get to know that there is an arbitrage opportunity, not only you, every other trader like you must be interested in capitalizing it. So every other trader, by rushing to market A, the prices of Apple in market A tends to go up. And as everybody placing the sell order in market B, the price tends to gradually goes down. So that 100 rupees will start gradually moving towards 105, 110, 120. And you see that 150 rupees in market B tends to go down to 145, 140, and 130, and it gets narrowed down. As a result, if there is a communication gap getting bridged between the price of two different markets to various people, the market becomes a lot efficient and you don't see any opportunities to exploit them. So you have to be really fast in reacting to the arbitrage opportunity. Having said this, Murugan, does it mean that the arbitrage opportunities works only on the books, not in the real life? Although this is a very common complaint against the arbitrage, but arbitrage opportunities do exist and it is even available to a common man at a very frequent basis. All you need is to closely monitor the arbitrage opportunities. So now let me give you some real world example from Indian stock market, how you as a trader can find an arbitrage opportunity. Let me begin with the rarest opportunity, which is the price difference between NSE and BSE for a same share. Let's take an example of Infosys. Infosys is available in two different markets, BSE and NSE. And interestingly, this is digitally available, so there is no a transportation cost, but there are some transaction cost. But since the markets are digitally available and definitely a lot of people are very closely tracing the prices, so in general, you don't see any significant price difference among these markets. Let me explain the second way, which is slightly complex, but if you understand what is spot and futures, then you can understand them. But they are more likely when compared to the markets between two different spot markets. So let's say you find Infosys trading in NSE spot market and Infosys trading in derivative markets and the future markets. And if you see the future prices are significantly higher than the spot price, so there is a way by which you can take an arbitrage opportunity. So that will be explained in the subsequent videos. Don't worry about it. And by any chance, if you see the future prices are way lower than the spot price, so there is again a smart way of using it, and that's called reverse arbitrage. That will also be explained in the subsequent videos. And there is a concept of synthetic futures that you can form using the options by way of buying a call and selling a put, and that can be in comparison with the future price to take any arbitrage opportunities. These arbitrage may be look so complex for you to understand it, but if you have a patience and if you look after the subsequent videos, we will be explaining each and everything in detail. That's the core objective of recording this particular playlist. And not just that, there is something called put call parity, and you can find arbitrage in different markets, maybe like currency markets and different assets and in interest rates. So we can talk about that as and when we see it is appealing to the traders. And in future, any concept of arbitrage at EQSIS we will be adding in this particular playlist. Hopefully you get benefited by watching the whole playlist. Thanks for watching this video. And if you are new to EQSIS, make sure that you subscribe and enable the notifications so that you don't miss any quality video that we post. You don't miss it in future. And thanks for joining us and watching this video till this minute.